today's content, we're going to talk about BTC. We're going to talk about BTC in terms of a triangular formation. We're also going to talk about it in terms of a volume and in terms of time frames. All right. So we're going to use like different time frames, two-day chart and 3-day chart, and we're basically going to take a look at it, the 21 EMA on both of those time frames. All right. So now, before we talk about the triangular formation, the current triangular formation, let's dive into the analysis regarding the previous one. Okay. The previous triangular formation, if you've been following my channel long enough, I said it multiple times, right? Within this triangle we got multiple bearish patterns. All right, so as you can see, we got a nice head and shoulder pattern formation, 1-to-1 extension to the downside. You could anticipate it. We also got a basically a nice triangular formation, descending triangle formation, 1-to-1 extension to the downside. It is going to take you all the way down just about like a 5k area. We said it a long time ago. So now you go back in basically 2018, most people did not pay attention to the triangular formation. They said BTC is going to the moon. We're not going to break 6k because we retested 6k like multiple times and we're never going to break it. What happened next? We dropped down 1-to-1 extension to the downside all the way down to like a low 3k area. So another basically argument most moon boys been making was like back in 2018, they've been saying like this trend line right there was a massive support, right? And most likely, okay, BTC is not going to break it. We're going to be pumping to the upside. We're going to like a 16k, 20k, 30k, and so on. We did not do that. We capitulated down. So now what I'm looking at right now, it seems like we're repeating the same exact structure. We're making the same triangular formation, right? Even though we're making pretty much a high lows, right? But back in 2019 we were making like a descending triangle. But however, back in 2018 we were making similar triangle formation. Price was basically making high lows, right? So similarly, that's what I'm anticipating, at least for the short term. If we're going to be breaking to the downside, most likely the bear is going to be strong enough to drop the price at least 1-to-1 extension all the way down to 7k level. 1-to-1 extension going to be 7k. However, okay, you gotta keep in mind, the bulls not going to be buying based on 1-to-1 extension. They're most likely going to be buying based on some support level, based on the Fibonacci retracement. If you take a look at it based on log scale, 0.618 going to be 56, and 50% pullback going to be 63. So but if you do it on a regular log scale, not regular log scale, but on a regular fib level, right, you can see like a 0.618 going to be 6,300 range. Okay, 0.786 going to be 5,200 range. So I'm looking for, at least for the short term, if the bear is going to be strong enough to break this level of 9k level, right, we're most likely going to be seeing a very rapid drop. Okay, a very rapid drop. I don't think it's going to be a slow drop. It could be, but based on previous analysis, I'm anticipating the drop to be very fast, very brutal, very aggressive. Most likely going to wreck most of the moon boys and most of the bulls. So if you're bullish, be cautious, because you got a very good chance to buy BTC below 7k and so on. All right, so now let's take a look at BTC in terms of a 2-day chart. So in terms of the 2-day chart and 21 EMA, I talked about it previously. Okay, I've been saying it over the last few weeks. We got multiple touches, okay, multiple supports, as you can see right there. We also got a beautiful rejection, right, but finally pump above it. But however, we cannot basically maintain a beautiful support, okay, in terms of like a push into the upside. The bulls, whenever they pump above the 21 EMA, they tend to get very weak, and then price is dropping again, okay, below the 21 EMA, and we could be seeing like a further drop all the way down to like the 100 EMA on the 2-day chart. I said it multiple times. Pay attention to basically the 100 EMA on your 2-day chart, which is basically pretty close to your weekly 21 EMA. So it is a nice confluence. As you can see, that's a weekly chart, right? 21 EMA just about like 86, 87. If you go to the 2-day chart, 100 EMA, it is just about like 86.33. So 86 level could be a possible temporary support, at least for the short term. If you're looking to put a stop loss after the drop, you can basically put a stop loss just above 94 level, and basically let the market do the work. You don't have to do anything after that. All right, market is pretty bearish. I don't see anything. I wouldn't say I don't see anything bullish. Yes, BTC is actually bullish in terms of like a macro scale. If we drop like below 3K and so on, it is going to be extremely bullish. But as of now, market can basically break to the downside and basically retest like some support level just about 6K to 7K area, at least for the short term. Now let's take a look at the 3-day chart. All right, 3-day chart. I also mentioned it, the 21 EMA, similarly to the 2-day chart, a very strong support / resistance. As you can see, after we dropped down right there, it was kind of acting as a resistance, but we finally pumped above it and basically retested just about like a low, not 95, but like 94.80, something like that, 94.80, depending which exchange you've been using. And now we drop back down and got a nice support just about like a 91.50 area. So we don't want to close a candle like this. That's actually very bearish. Okay, as you can see, multiple times. Okay, I said it multiple times, be cautious whenever you get this type of a 3-day chart rejection. We're most likely going to be continuing the downtrend, and we're getting another basically bearish pattern. So we just got to be very cautious. Similarly to the 2-day chart, if you like to pay attention to your 3-day chart, you could be paying attention to your 100 EMA on your 3-day chart. All right, so at least for the short term, my bias is still bearish. I've been saying it. Pay attention to 50% of this candle. If you watch my previous analysis, I said it, right? This candle right there, I said it multiple times. Price loves to go back and retest 50% of the most bearish candle. If you watch my previous live stream, I said it, right? You can see like 50% of it, just about like a 9500. Okay, but if you take a look at it on the lower degree, it seemed like BTC wanted to push back up to like a 70% of this candle. So I was waiting for it to go all the way up to 95.60 for me to add more shorts, but it seemed like we got rejected. So it is okay, I can still add more shorts right now and basically be looking for like some very low numbers. So be cautious if you're bullish, because if you're bearish, you just have to basically make sure to put a stop loss and do all that good stuff. But however, I don't think market for the bulls going to be strong within the next few days, at least for the short term. Now let's take a look at basically the 7-day chart. All right, it is a chart pattern I just been analyzing over the last few days, and as you can see, the 7-day chart, it is kind of different. It is different with the it's not the same with the it is not the same thing as the basically weekly chart. Yes, the weekly chart is 7 days, but the 7-day chart, right? The difference between the weekly and the 7 days is like the 7 days start like on January 1st. So let's say January 1st is a Wednesday. Okay, the first candle going to start like on Wednesday. So Wednesday going to be the first, next Wednesday going to be the 8th, and so on, right? So because the weekly chart is based on Sunday, and the 7 days chart is just based on the first day of the year. So you take a look at the 7 days chart, right? As you can see, it is kind of a aggressive way to look at the market. How it is kind of a very aggressive way of looking at the market. As you can see, like back in 2019, when most people have been saying we're going to be pumping. As you can see, BTC been dumping on a 7 days chart, dumping, and most people have been saying we're going to the moon, but we just keep dumping. Okay, we just keep dumping. So it is something like I just wanted to point out, and we haven't seen like a 3 weeks, 4 weeks of dumping pressure. So you just got to keep that in mind. You take a look at the 7-day chart, beautiful engulfing candle. We pumped to the upside, got rejected, could not close above this area, okay, of just about like a 98 level on the 7 days chart. You go back in 2019, big rejection on the 7 days chart. Price pumped it upside, got rejected, pumped it upside, got rejected. So we basically making the same structure in terms of a triangular formation, in terms of like a candle pattern, in terms of basically volume structure, moving averages, everything is basically pointing to the downside in terms of market in terms of like a market facing a high pressure within the next few days or so on, right? So I just wanted to point it out. Pay attention to your higher time frame. The lower degree can basically be fooling you, like we're gonna be going to 20k and so on, but the market is calling for lower numbers. Volume is incredibly decreasing, so volatility going to be rising within the next few days. As you can see, volume cannot go to zero. I said it when BC was right there, and I said it like volume cannot go to zero, and most likely we're going to get a very big volume, guys. A very big volume within the next basically a few days or within the next few days or so on, right? So imagine this, if this volume going to be red, okay? If you bearish, you know what that means, right? If you bullish, you also know what that means. So let's just keep that in mind. We're going to get a very big volume. This volume going to dictate how strong the momentum going to be and how strong we're going to be pushing to the upside or we're going to be pushing to the downside. If it is red, of course, we're going to be dropping very aggressively to the downside. If it is green, guys, we're most likely not gonna break 10.5. I don't think 11k gonna basically handle the pressure, and I don't even think 11.7 going to handle the pressure. We're most likely going to be pushing all the way up to 12k. That's something also, if you're bullish, you can basically anticipate. If you bearish, you have to be very careful regarding a very big volume and pushing above 10.5 area. So sideways correction over the last 60 days. So I don't think the next move, I don't think the next move going to be like a 400 points, 600 points and so on, right? It is going to be at least a 2,000 point pump or dump. So just be ready. No need to basically FOMO, no need to basically play the hourly unless you're scalping. But if you're swing trading, just try to pick up the big move. Don't try to play, I'm not giving you any financial advice, but I'm just telling you like, how I've been doing it over the last at least 30 days. I tried not to basically over trade, or I tried not to basically over leverage, or basically over get a very big position in a basically small time frame. All right, at least for the short term, that's all I wanted to point out. So now let's take a look at Ethereum. I'm just gonna basically show you like the bearish pattern regarding Ethereum. So Ethereum USD. So now let's take a look at Ethereum. Ethereum, we got a nice you could call it a bull flag, but it is so bearish in terms of like a 7-day chart. We cannot basically, that's a 7-day chart, right? Look at how basically constant Ethereum been over the last let's say 2, 4, 6, 8 weeks. Okay, over the last 8 weeks, same exact level. We cannot close above it. This candle just opened like on the 8th. We pumped to the upside, so we got like almost another, the 8th to the basically 15th. Okay, we got another 6 days, almost 5 days. All right, we got another 5 days to close this candle. It is actually very critical right now for Ethereum to try to close above like a 243. 243 was my basically resistance, even though it pumped like above up to like a 249. Okay, 249 to 250. So if you're familiar enough with Ethereum, 249 is not just a current resistance. You have to go back in basically right there. You have to go back right there, and you can see like back in basically 2018 was a very strong resistance. As you can see, like back in May 2019, very strong resistance slash support. And back in basically February 2020, as you can see, we got a very strong resistance just about this level after the 7 days capitulation. Big move to the downside. We've been dropping almost like for 4 weeks, guys, and people been calling for Ethereum going to 10k. Ethereum kept dropping. Okay, so we're basically making the same structure. Be cautious for Ethereum. All right, basically continuing the downtrend. Big engulfing candle to the downside, price pump to the upside, but could not break the resistance. So would be looking for the low $200 to a 195 level for Ethereum to find a support. If not, we're most likely going to be continuing the downtrend. Okay, so now let's take a look at Ethereum in terms of a weekly analysis. So let's take a look at on the 7 days, not on the 7 days, but on the weekly time frame. Ethereum. let's take a look at it on Poloniex. So if you take a look at Ethereum on Poloniex, right? So I said it multiple times, you got to be able to pay attention to the Ethereum 25 MA. So we got to pay attention to Ethereum 25 MA. We close above it. Okay, I was very bearish when Ethereum got like a multiple close below the 25 MA on a 2-day chart. I was very aggressive. As you can see, it pumped back up to the just about like a 250 area. Now I'm looking for another close below it. If like we get another close below it, it is going to be incredible. This candle is going to close like in 30 hours. So let's see within the next 24 hours how Ethereum going to be able to handle like the pressure and basically close below 236. So a close below 236 could create multiple bearish pattern even on a lower degree. Okay, so now let's take a look at Ethereum on the lower degree. When you take a look at Ethereum on the lower degree, just like in terms of pattern formation, as you can see, we got this move to the downside. It wasn't impulse but very corrective, but we got another correction. This correction is basically, you got 1 2 3, you got this 1 2 3, and then you got another 1 2 3, and I'm expecting this move to the downside. So Ethereum, I said it, Ethereum love to give you basically a flat correction as a top formation, as BTC loves to give you a basically a triangular formation. I'm gonna show you another pattern. Okay, take a look at this pattern. I called this pattern a long time ago, before the drop right there. So, and I was like, Ethereum gave us this pattern formation. I was like, okay, this is a bullish pattern formation because the pattern started from from the bottom to the top. So continuation pattern. However, okay, afterward, okay, Ethereum changed the pattern and give us this flat correction right there. So I was like, okay, instead of looking at it from the left, we have to look at it from the right now, because we're making what? We're making lower highs, right? And basically price is we're making low highs and price is basically facing a lot of pressure. So I was looking at this flat correction to be continuing the downtrend. And if you've been following us enough, okay, if you've been following my channel since like at least back in January, you can see like I was calling for Ethereum capitulation down to like 180 and so on. After that, we got this three-way move continuation pattern. So it could be the same thing, guys. It could be the same exact pattern we could be facing within the next few we could be basically replicated within the next at least few days or so on. Ethereum very bearish. I was actually very too bearish on Ethereum when Ethereum was right there, right? I didn't think like Ethereum gonna break like 240, right? 243, but it is okay. It broke like 243 to hit like a 250. It is okay. It is just like it's not a big deal. But at least for the short term, this 4-hour candle is actually very, very bearish, and Ethereum loves to give you 6-hour bearishness, as you can see right there. I mentioned it in my previous live stream, and I said, pay attention to your 6-hour time frame. Whenever your 6-hour is basically for Ethereum, not whenever, but most of the time when you get a 6-hour engulfing candle, bearishness, most likely it is going to basically give you another continuation, and we're most likely going to get some continuation. It might not be linear. It could basically do something like this, make another bear flag and drop the downside. The main thing is like, we're going to be dropping. Okay, I'm looking for another drop from Ethereum. Not sure if you're going to get a bear flag, or we just going to whip down and retest like a $200 right away, or we're going to be basically move sideways. All right, at least for the short term, that's all I wanted to cover. If you're new to the content, make sure to hit the likes, make sure to basically subscribe and join our public Telegram group. Link in the description. If you're looking to join our premium group, make sure to send me a message. Be safe, trade safe, and market volatility going to be very high. Be cautious. Okay, all right guys, thanks a lot for watching.